episode of the Weekend Chart Prep is being brought to you by the Smart Money Manuscript. Hello, my name is Timothy Leroy Sr., and I'm the creator of the Smart Money Manuscript. But Tim, what is the Smart Money Manuscript? The Smart Money Manuscript is your roadmap to financial freedom. Inside this powerful course designed to transform your financial future, I've meticulously condensed over 1,000 of my public YouTube videos into 40 highly efficient lessons that span just 2.5 hours. This course is strategically designed into 4 phases to help guide your learning in the most logical and effective way possible. Phase 1 lays the groundwork, covering essential financial literacy like budgeting, banking, and taxes. In Phase 2, you'll move. This thing has been getting on my last nerve for the last 10 minutes. I ain't even gonna hold y'all. But y'all can see me now. And here it's
Yes.
Shut up, Tim. Okay. All right, man. Oh my goodness. Oh my goodness. Boy, look at him. Y'all know my old man temper. I was getting so mad. I was getting so mad, man. Good afternoon, everybody. How y'all doing? I was in here working with the youth. We started our for those that wanted to participate in learning how to trade, we started our ICT journey today. And I said, hey, while I'm here, let me do a weekend chart prep. Since we here, let me open up my trading view. How y'all doing, man? Let me look over here. See if there's anyone on the tube. Looks like there may be some people on the tube. See a few people in Zoom. Warning, the stream's current bit rate lower than recommended. All kind of stuff. I'm getting all kind of issues, man. This right here. It's over on the tube. For those that's on the tube, is it okay? I see Michelle put something in the chat. Is it looking okay over there? Hit learn and share, Michelle. Way to promote in the background. Yeah, I just finished with the teenagers. The teenagers, the teenagers is the reason why I got the Smart Money mentorship, and then I just transferred it over to the Smart Money Manuscript, right? Because the Smart Money mentorship was just for the teens. Then I was like, hey, you know what? I'm doing a mentorship over there too, so I'm just gonna move the name. All right. Okay, now it says excellent condition now, but it might just be my Wi-Fi. It's the weekend. We're going to Thanksgiving break for our county on the school system. There might be a whole lot of kids that's still up from last night playing video games all night long and bog. Okay, and then it says frozen. Okay. All right, man. Let's go ahead and get into it. Let me share my screen. Let me share my screen. Did I share the right screen? It looked like I shared the right screen. Okay. All right. Okie doke. Shout out Miss D, Yolanda, Jim, Lump, Rhonda, Sonia, Here Learn and Share, Michelle. Shout out everybody taking time out your busy schedules to come hang out with me. We're gonna go ahead and get right into it. Not gonna hold you long for the day. Okay, before we get started, real quick, I noticed that I still got some stuff on my chart from on Friday. I was in here trading late Friday. Right. And if you notice, I got some stuff on my chart here. I know you probably can't see it, so I'll enlarge this. Right. That there. This is stuff that we marked out during our pre-market analysis. Okay. During our pre-market analysis. And I just want to touch on real quick. I guess it's an experience thing. Because y'all always hear me say things like, is price showing a willingness to do this? Is price showing a willingness to do that? All right. And then y'all hold on for a second. I gotta pee. I ain't gonna hold y'all. Y'all talk amongst yourselves until I get back. I've been sitting here for a long time. I've been in here since 11 o'clock with the teenagers. So the old man bladder calling me. Talk amongst yourselves. I'll be back in it. Matter of fact, let me do this right here. This is what I'm fun to do. Why won't it play this?
Him go to the bathroom.
Why won't it play this?
We'll tell them about the smart money.
Y'all just look at each other because it will not play that video.
Your OCD will let you sit there and try to get this to work. Go.
Y'all just look at each, talk to each other. What that? Yeah. You all right? Huh? I said, you all right? Yeah, I'm good. You say you did. How your knee feel? It's like it was achy. Like it ain't got no knot or nothing. Nah. It just hurt. How it feel when you bend it?
Hey, it's not even when I bend. It's like when I walk in.
Or when you put pressure on it? I mean, like when you put weight on it.
Yeah, like on that step, and it's like on and off. So sometimes I walk in the school, the other time it's like right now I'm standing just because I did that. Like I'm feeling it. It's like kind of like a slow rise. It did go back down.
How's everybody?
It's like it's a meniscus or whatever you call over there.
So you feel
Good. Like, how are you?
I'm good. Just chilling on a Saturday.
If that makes sense.
Yeah. Cause what you call that? What's the little thing? Is the meniscus that's in between the bone on your knee?
It is.
It's got like two little things in it.
I don't know if it's the pad. Yes. Like that's the meniscus is the little space between the two joints. So they're like.
I was just about to go to the park and watch the video he did on Thursday.
I gotta catch up on them too.
It was a good one.
The outside part, lateral meniscus.
Who was on that? Yolanda?
Pad in between the kneecap will be there, or the cartilage itself. Or the cartilage, yeah, that's how it's feeling. Yeah, that's how it's feeling.
Did anyone find this week difficult to trade?
Probably a couple of days. But you know what I'm saying? You're a Thundercat, so you should have bounced back in 48 hours.
Yeah. I don't know. I told you or I told Mama, like, you know,
I didn't trade. It's kind of hard for me to trade because I work during the day, and by the time I get home for the Asian session, I am tired. My mind's not there, so I'm trying to get back into the swing of things.
but I'm just talking about
But I know Tim said in one of the videos that this whole year,
I don't
ICT said was also,
how old athletes they be walking like
I guess, hard, did more difficult than prior years, I believe.
Kenny Smith. I really hope not. But they already aching and
I
bad right
found
now.
this week difficult because there was so much volatility, and so whenever my setup occurred, the amount of risk was too high. Or a lot of times price would move and it wouldn't give me an opportunity to use my setup. So I didn't take any live trades this week. I just did a lot of sim trades if I saw something, but it didn't match my model. So my sim account is flush with sim money, but my live account is just break even since I took no trades. Just a bit frustrating.
That's why I got hit because I was on the way there. Because I was going to the gym and then he texted me like, "Oh, where you at?" He's like, "Want to come get the camera?"
I
I'm
do
like, "Yeah, I'll be here
swings,
before I
so
get to
I
the gym."
just closed
And
a
I was
few
glad because
swings this
I was in South
week,
area. I called you.
and I am going to get back into some. And I do like cash secure puts and cover calls, so
Yeah, he was smoking black.
that's what I do. So I'm not in the day-to-day thing.
I probably say like late 30s, 40s, but he said he a truck driver. You know the truck drivers age differently, so yeah, I can't tell. But we're far from peers. Far from peers is crazy.
Who's cooking for Thanksgiving?
This nigga said we far from peers.
Going to
Ma'am,
mom's.
mama cook and I'll cook something over there, but she'll do most of the cooking. Can you all hear me?
Yes.
Okay. So we're not
Okay.
doing the
Oh well, I'm back.
traditional, we're gonna barbecue.
I done left my mic all on mute. What y'all say
Yep,
about a
we heard
barbecue?
everything you said. We heard everything you said. No, someone asked it who was cooking for Thanksgiving, and I said that we are, but we're not doing the traditional Thanksgiving. We stopped that a couple of years ago, so we're gonna barbecue.
Okay
Get
then.
the traditional at my mother-in-law's house.
Okay. All right. So I see a few more people that slid up in here.
Tim, you barbecuing the pig this year?
What stop? Hey, your nephew, I was talking to your nephew. He had hit me up earlier, said somebody had ran into the back on and he FaceTimed me. And when he
My neck and my back. Johnny Cochran.
he FaceTimed me and I was checking everything out. And then I was like, "Are you good? You sure you good?" He like, "Yeah, I'm good. Ain't nothing." And then when he get to the gym, he texts me from the gym. Maybe it was the adrenaline, but now my knee feel funny. My knee hurting. Like, oh Lord, I done let the dude off the hook. And then, so when I was just going, I was checking on him, make sure he was all right. And he was showing me what was going on with his knee. I'm gonna have to go outside in a minute, look at it. Cause I was looking at the car on the FaceTime. Don't look like the bumper just absorbed it.
No, I think he
And
got a good 24 hours to
and,
claim injuries from accident.
and on the
You need to
bottom,
go get checked out now.
Yeah, I
They
think he
need the
got it.
medical records for
He
proof.
got yeah, he do got a little bit of time after the accident now. Help nephew get that what kind of truck it is, the track out.
get the track out. You know what I'm saying? I said, let him off the hook. I say, see, this is why people tell you just file the police report,
You
just in
just let him
case.
go. They didn't even.
Yeah.
Oh, okay.
Yeah, because
Oh,
wasn't nothing wrong with the car,
oh,
wasn't nothing wrong. He was saying he was fine. I'm like, are you good? He like, yeah. Yeah, like I'm good. Because I wasn't there. What I'm saying? I ain't know if he was
yeah.
just sitting still and somebody bumped him or yeah, because when he was showing me the car, you know what I'm saying, I couldn't see nothing wrong with the car except like the plastic on the bottom was a little cracked, like all the way
Yeah.
under the bumper. And I'm like, is there any paint cracked and anything? And he like, everything look good. Then I was like, okay, you fine, ain't no damage to the car. You know what I'm saying? I ain't worried about it, whatever, whatever. And then like about 15 minutes later, when he was at the gym, he was like, I don't know if it was my adrenaline or what, but my knee feel kind of funny. And it, you know, cause he had hurt his knee playing football before. So he probably just re-aggravated that same injury. So I just I'll like just, you know, keep me posted on it. I'll just watch him, just keep me posted on it. I done let the dude off the hook. I could have one call, that's all.
Yeah.
Could have called Ken. I could have called
Anybody. You could have
or
called Saul.
not Saul. We got one up here named oh man, my dog Maurice passed away, but Maurice, I used to mess with Maurice all the time because he had got into a wreck, and those people actually called him. It wasn't Ken Nugent. It was it's gonna drive me crazy. Gary Bruce. No, it wasn't Gary Bruce. That's called Gary Bruce because he's the good guy. No, they weren't Gary Bruce. It's golly, it's gonna drive me crazy. But I used to mess with him all the time because every time I would see past like the billboard, I'll take a picture and send it to her. Maurice would be like, hey, stop playing, you playing, man. That's serious, man. That's serious. Laugh at my pain. Oh man, I see what's name got a thing come out called Act My Age. I'm about to check that out. Kevin Hart got one coming out Monday.
Oh yeah, Keita just told me about that yesterday.
Yeah, called Act My Age. That boy talking about he talks when you get old, things don't be regular. That boy Penn talk. See this straight up, just like that right there. This here, that's all I got. I showed it to the doctor. He gonna tell me just use the other side. What? Fix it.
Just use the other side.
Just use the other side.
Did you watch Eddie Murphy?
Oh no, I ain't watched it yet. I'm about to look at it.
You gotta watch that one, man.
I'm about to look at it. Oh, this is what I was saying before I had left off.
Yeah, he was taking trades late last night.
Yeah. So do anybody know who want to take a stab at? Because we done covered this before. But who want to take a stab at what it means when you say is price showing a willingness to do this or do that at certain PD arrays? What, like, give us an example. Pick a PD array and then give us an example of what we mean when we say is price showing a willingness to do this or do that. Right? Who won't take a stab at it? I know somebody do.
I think it's price willing to respect those PD arrays. Like if we're in a sale program, is it gonna respect the bearish PD arrays and have a willingness to continue down, and vice versa in a buy program?
Okay, that's real broad, like we always do. We real broad about it. So we want to go a little bit in depth for people who don't understand what respect means. Because you may, like, I do it all the time. I say stuff and I think I'm being super clear. And then I come back later and say the exact same thing that I said, but I give a little bit more detail, and people be like, oh, I ain't never looked at it like that. Right. So what does respect mean?
So you mean like when it don't go past that first 25% and definitely not past the consequent encroachment of 50%.
Yes. Those little detail like that, right? Those little detail like that. Now, not just that. Give me an example of, we're using this right here. We're going to use, because this is what I traded off of. We're using this right here, right? If price has come down to the lower quadrant of this PD array, right? Because this right here this is a 25 right there. So for me, that's a lower quadrant of something, right? So let's click on this and see what this is a lower quadrant of, right? So this is the lower quadrant of that daily range, right? That's the daily low and daily high, right? So we're at the lower quadrant of that daily range, okay? So now, if price is here and price is coming down to that lower quadrant, right? What do we expect price to do at that lower quadrant? If it's above it and it's coming down to it, we see that we're in a discount on the day, right? Let's zoom it out so we can get a clear picture of what's going on, right? All right. And let me make this, I'll make this a little fatter so we can identify exactly what we're looking at. Okay. We're in a discount on the day, right? We've come down to a lower quadrant of our 60-day look back. We've touched a daily inversion fair value gap, right? We've traded back up above the lower quadrant of our dealing range, right? And then now price, we've come up here. We see here we've set relative equal highs and prices trading back down, and we've come to a lower quadrant of the day, and we've come down to the lower quadrant of this expansion leg right here. I mean, this dealing range here, the latest expansion leg of that dealing range. So we've come back down to a discount at the lower quadrant. Well, no, that's before that. I mean, that's after that. Let me cut this off. All right, so cut all that off right there. All right, so now we got the picture. We got the picture of what's going on now. Boom. We got the picture of what's going on now. So now, what do we expect price to do at this lower quadrant right here? Right, when we come down to that lower quadrant, right, we're coming down to a breaking structure. How do we know? Because that's some buy side liquidity that we was looking at. This is some buy side liquidity we was looking at. So we're breaking structure here, breaking structure there. Now we're retracing back down, and we've come back down into this lower quadrant right there. What do we anticipate price to do there?
We anticipate price to react off of that significant level and look for a retrace, because we also took a swing low over there. And so now we want to see, since we are in a sell program, we want to see if price will, I guess, I don't want to say, you said don't say respect. We want to see if price will remain in the sell program and it's just a retrace to come back down, because we have the first fair value gap in that move down.
Okay.
So we want to,
here we are here now. So are we in a what kind of program we in?
That's the buy program in that area. Okay. That's the buy program in that area. So we want to we see it retrace or react to that 25% level. So now we want to see if we're going to react to continue back up in the buy program, or if we will get to that first busy, respect that, and continue back down and go back down.
Okay, so here at this point here, coming down here, you're saying we're seeing if it's gonna go back up here,
because we hit that 25%, which is a significant level. We're gonna react to it. So I anticipate at least a retrace at the very least.
All right, so we're anticipating a retrace here.
A retrace, yes.
A retrace back up, because we've come down to an anticipatory reactionary point, got breaking structure, and now we're trading back down to a significant level, and we're anticipating at least a retracement back up.
Right. All right. And we have in that little piece, we had that first SIBI. And if
all right, we're just gonna stop there right now. Anybody got something different? We getting bouncing off of anticipatory reactionary point, breaking structure, pulling back into a significant level, expecting at least some type of retracement back up. Anybody got anything different? Don't y'all just sit there quiet now. Don't y'all sit there quiet.
Did y'all eat, or y'all just eat, or y'all didn't eat?
I ate some cereal earlier.
Oh, my bad.
Ain't nobody else gonna chime in?
What was the question?
Oh my God. Oh my God. We said, I mean, Yolanda said off this lower quadrant of the daily range, we're expecting the price to at least give us a retracement back up because we've come down into a daily anticipatory reactionary point, right? Got a breaking structure, and now we're retracing back down into this lower quadrant. So we're looking for at least a reaction, at least some type of retracement back up at this point, at this quadrant there. I was in the original question was like, what are we expecting at this quadrant when price came down into this quadrant right here?
I say a retracement, and now that I'm looking at it more, even possible consolidation, because we've hit that anticipatory reaction level, and when you look at the whole thing, it looks like we could be coming back up into a buy model that we broke structure. So we may, if I look on that left, it looks like at the same area where there was some consolidation on our sell side. So either, like I said, either a reaction off that 25% level to retrace up, or consolidation at that level.
All right. Retrace up or consolidation at this level
Just
right
because
here.
I'm looking left, because I think we're on the
Yeah.
buy side of the curve.
Yeah. Yeah. So this level right here, she's saying this level right here is anticipating to be support. And the reaction that we're looking for is either a retrace back up or some type of consolidation at this level here, but this level holding pretty much. All right. Anything else? Anything you want to add to it, Rhonda? Or anything you got different?
You can add that the price created those relative equal highs. So it created the liquidity, then, goes away from it to go back to discount to come get it later.
All right. Again, what do we expect right here? That's the question right there. What are we expecting right here? We got the narrative. We got the relative equal highs. I didn't, y'all just repeating what I said. I gave all that already. I said we was in a discount. We came to the daily PDub rate. We set relative equal highs, right? We got a breaking structure, set relative equal highs, and we retrace back down at this lower quadrant. What are we expecting price to do right here? All right. What do we expect the price to do right there? And so far, Yolanda said we want to see at least a retracement back up off of this right here. That was her long-winded input. At least a retracement back up there or consolidation, but this level holding, right? This level holding. What do you have to add to it, Rhonda? Did I explain the question good that time?
You did, but I'm be guessing. I don't know what to add to it.
Now, I ain't saying do you have anything different than what she said? Because she's saying expecting this to act as support, meaning you want to see a retracement higher based off this. We got a breaking market structure. We already said we got relative equal highs up here. So if we see a retracement higher, right, we expecting a retracement higher, right? So if we expecting a retracement high, because this is our current this is the latest bullish dealing range right there off this buy program on this side, right? So we've come back down. This is right here is equilibrium right there at that breaking structure, right there at that quadrant level, right?
So Tim, I had one out for a second. Right here when we saying, is it saying after that retracement, is it going to continue to go back down, or is she expecting it to go back up? So retrace and then continue down.
Wait, off this level here,
Yeah. Then that little retracement.
Expecting this move up like this right
Yeah.
here. All right. Yeah, that's what I say. What are we expecting when price came down to this level here? And then looking at this now, I ain't chop off enough there like that. Now that price has come down to this level here, right? What are we expecting there based off of everything that we said, right? Relative equal highs, breaking structure, bouncing off of a discount PD array on the higher time frame, right?
So
What are we
so when you
expecting right
squeeze it up a little bit, I noticed earlier when you squeeze the screen up, it looking like we about to be on the right side of a buy model.
Okay.
Or already on the right side of a buy model, rather.
Okay. And so again, Yolanda saying we expecting this to act as support, meaning seeing a retracement back up or a consolidation here.
Oh, okay.
All right. So do anybody else got anything different besides that quadrant level there acting as support and sending us back up? And then she added in maybe even a consolidation because anticipating this to act as support.
I can agree with that.
I agree. I don't see anything different.
All right. Good.
So
Now, yes.
boundary that you drew from the top down, don't we have to extend it now to the lows? This one right here from the all the way from the 25,300. Yeah, this one down to the low.
Down here.
Yeah. Don't we have to extend that down?
You can.
So if we extend that down, the price came up to at least 50% and it immediately rejected.
You can move that to there. Yes, you can move it to there.
So price came up to relative equal highs and it's trading away. And it disregarded that BISI. It didn't use that.
It created the relative equal highs. It didn't come up to it. It created relative equal highs. It came up and created relative equal highs.
Yes.
And then moved back down. Yes.
Moved back down and broke down below that BISI, which is supposed to be quote unquote support. Because that's the first presentation BISI. So price, if price was bearish, it would come up to that BISI 50% and then just reject off it again.
Okay.
We also have like a little bit of a breakup market structure in that 1 minute time frame.
Okay. But again, so you're saying at that 25%, right? This was our daily.
Yeah,
there.
kind of like how when 9 a.m. started, they also did this type of BIPC and then it traded into it. It didn't find support and then it played along and then they just went right back down.
Okay. So again, you're saying, what are you expecting for this level right here?
Yeah.
Right. So for this level here, you're saying
Price.
you're not anticipating that you're not anticipating anything out of this level right here because we've created an inversion fair value gap there.
Yes. Well,
All
it's
right.
go back up, test it, and then maybe find a reason to sell down.
All right, go back up, test it, and find a reason to sell down. Okay. Anybody disagree with that?
No, I agree with that because I think on daily we're still in a sell program.
Yes, the daily. We're still in the sell program on the daily. All right. So we have a.
So were we supposed to be considering the higher time frames for your questions? I thought we were just looking at
That's
this
why
chart.
I zoomed all the way out here. It said this was our daily range, right? I said we come down to a daily anticipatory reactionary point. We got a break in market structure. Now we're above the lower quadrant, right? And price set relative equal highs. And now we're trading back down to that lower quadrant. What the question again, what do we expect out of this lower quadrant right here? Yolanda said at least a retracement back up or a consolidation. Empire Trade said he don't expect nothing out of it because we've created a inversion fair value gap, and now he's anticipating it coming back to the inversion fair value gap, which kind of aligns with what Yolanda said was a retracement and some type of retracement off of it. But, you know, so Empire Trade is saying his eyes are on the inversion fair value gap and it retracing back into it, right? And Rhonda agreed there. And so, right, the question again, what are we expecting of this level right here? Now, and see, now that we're talking about this out loud, right? These are our inner fears of being wrong, and we don't want to commit to anything, right? That's the reason why I'm doing this right now, because these are the things that I struggle with every single day as a trader. You have these internal fears of being wrong, right? And now, right now, it's like we all out here on Al Gore's internet, and don't nobody want to be the one to commit to something. And then I'll be like, nah, that's not what it is. And be like, God, dog, I look stupid in front of everybody. Right. These are the same internal fears when we go on that cold right edge over here and we don't know what's coming next. It's these same internal fears that stop us from committing to the idea that I believe these concepts are going to work. So because price did this, then it should do that, right? I asked about this right here, that line right there, right? And we keep dancing around all this other stuff over here. This is already established. We know what we got over here. Now, what do we expect out of that line right there? That's the question right now. You see what I'm saying? We've gotten back above it. We've gotten back above it. And now we're coming back down to it. Okay. We're coming back down to it. And if we extend all the way down, if we extend our dealing range, right? If we extend our dealing range, like Empire Trades was saying, right? When we came up and made these relative equal highs, where do we set these relative equal highs at? Right there, equilibrium. We didn't quite make it to equilibrium, right? We just came up here, created relative equal highs, and then we traded away. So now we're trading away from relative equal highs, right? And if we extend our dealing range, we're not back at the lower quadrant yet, right? We're not at the lower quadrant yet for the entire dealing range, but for the dealing range of the day, right? We're back at that lower quadrant, right? We're back at that lower quadrant now. So what are we expecting at that line right there? Right? Okay. So now moving on, right? We got act as support. We got create some type of retracement, right? We got it's going to act as, it may act as some type of support, but I'm expecting it to fail because we created a inversion fair value gap, right? We got those two schools of thought. All right. And I'm here to tell you that neither school of thought is wrong. Both schools of thought are right. Right. Why? Because we have a bullish breaking market structure, right? Coming off of a higher time frame PD array after sweeping liquidity, right? Where we came up, set relative equal highs, okay, based off of our set daily dealing range from yesterday, right? We've set relative equal highs that's below equilibrium based off the extension of the dealing range. We've set relative equal highs right at equilibrium. We've created a inversion fair value gap. Okay. That's a bearish signature, right? We've traded down through that quadrant level, right? We've pushed through that quadrant level. That's a bearish signature, right? So right now, the buy program is not invalidated yet, right? Because we're coming here, right? We're coming here from our buy program. It's not invalidated yet. Okay. And we're inside this latest expansion leg of that buy program. but now we're getting a bearish signature inside of this right here. So now you're showing signs of bearishness. So you're not wrong for anticipating this to act as resistance, because it's the first BISI that was created before going up, taking out liquidity, and coming down and getting that change in the state of delivery. Right. So neither is wrong at this particular point right here. Neither is wrong, because neither side has been invalidated yet. Right. Neither side has been invalidated yet. And then remember when I said, what did I say was laying right here? Who remember said what I said? What was laying right here? Right. Let me fatten it up for you so you can see it better. Make it a solid line.
That's that regular trading hours preview.
Nah, right here, right, that red line right there. Right. What is that red line right there? Let me change the
equilibrium.
Yes, equilibrium. Right. That's 50%. See it right there. See when I'm changing the lines, right, for that dealing range, the latest expansion leg, right? So what does that mean? We're right in the middle of the road for this bullish dealing range, right? So when you're right in the middle of the road and you can form an argument for both directions, is that high probability? No. So that's why I say both are right. At this point in time, both are right. Okay. Everybody tracking? Now, this is the stuff that, like I say, these are the demons you're going to be battling with when watching price, right? You're afraid to be wrong, so you won't commit to anything. And if you don't commit to anything, you're not going to be able to push that button when it's time to get in. You have to commit to something and then let the algorithm prove you wrong or prove you right. Okay. Everybody tracking? Everybody following? All right. So now Empire Tradings has jumped ahead of me and gave us a PD array, right? A PD array that we're going to be watching to see if it's going to be respected. Okay. All right. Because remember what I said. When I came in here, y'all see what I had highlighted. I had this highlighted right here. And I said, we're going to use this as an example, right? Empire Traders has jumped ahead, right? I don't know if you just a super nerd. I don't know if you just good at reading price, but this right here is going to be a part of what influenced my trading decision. Remember when I came in, I said, this is what I traded off of, right? Now, using this as an example, it goes back to the same thing as Empire Traders were talking about this, right? What did Empire Traders say about that BISI right there? He said that BISI was what?
The first.
That was the first BISI that was created on this expansion right here, right? Looking at that SIBI right there. That SIBI is what?
What you mean? What, in line with that other one?
That's the first. That's the first SIBI created after that little retrace going down.
After this little consolidation here, we retraced up into there. That SIBI right there is the first one coming down, right? So now, looking at where we are, we're coming down to that quadrant level. We're coming down below equilibrium, right? We trade down into, PD arrays over here, but we're anticipating some type of retracement involved with this quadrant level, right? When price, let's move forward. All right, that's going really fast. So now, price trades back up into that SIBI right there, right? So now, price trades back into the SIBI right here. We trade all the way up above the upper quadrant because there's a volume imbalance there. So we include in that. We trade all the way back up, reprice the entire thing and close above the upper quadrant, right? So now we're watching this SIBI right here because we want to see if it's going to become what?
An inversion, high probability inversion. Yeah.
Yes, we want to see if it's going to become an inversion fair value gap. We come up here and close above the upper quadrant, right? Then we reprice above, but we close above the upper quadrant. All right. All right. So the next candle come up, we trade up, right? And we close right at the upper quadrant, right there. Okay. Now, notice what's going on here. We're below an inversion fair value gap, right? We're below an inversion fair value gap. This is a true inversion fair value gap, not just one that we closed below, but it's the first one in a move. So it's a true inversion fair value gap, right? When we say that we want to see price show a willingness to be respected or be disrespected, what are we looking for when it comes to fair value gaps? If you want, if a bearish fair value gap is being respected, we say we want to see what be defended. What do we want to see defended in a bearish fair value gap?
That lower quadrant
Bearish fair value gap.
of coming back up into a bearish fair value gap.
Yes. What do we want to see be? What do we want to see be defended?
The lower quadrant upper.
No.
You don't want to see it go past equilibrium.
Yes, you don't want to see it go past equilibrium. So what's being defended? Listen to what I'm asking. Not where we want to see the reaction at. What do we want to see be defended in a bearish fair value gap? If you don't want to see
The
it
upper
go
quadrant.
the
DE?
upper, not the upper quadrant, the upper.
Equilibrium.
You want to see the premium be defended. You want to see the upper half be defended. You want to see where if price get up in this upper half, you want to see it get out of there. You don't want to see it be touched. But if it get into that upper half, you want to see it get out of there. You want to see the upper half be defended inside of a bearish PD array. Okay. So the inverse is true for a bullish PD array, correct? So for a bullish PD array, you want to see the lower half be defended. Correct? Everybody follow me, right? Everybody follow me? Makes sense?
Yes.
Okay. Makes sense, Yolanda? You understand what I'm saying? The difference between
Yeah, I got you now.
Okay. All right. Okay. All right. So as we're watching to see if this becomes an inversion fair value gap, right? So now, if this is going to become an inversion fair value gap, right? What do you want to see defended? The lower half, right? Right. If we do make it an inversion, right? We want to see the lower half be defended. All right. So if price doesn't even give you a willingness, right? We repriced all the way through, closed above the upper quadrant, right? So for this right here, right, coming up in there, all signs is pointing to when we traded up here, All signs is pointing to this right here is failing and it's going to become an inversion. Because why? We came up into a bearish PD array and we closed above the upper quadrant, right? So all signs are pointing to this is going to become an inversion. But we forgot that we're below an inversion fair value gap. If you're really banking on this becoming an inversion and going up to that buy side, right? Because this is what we should be paying attention to off of this retracement. We're anticipating some type of retracement or consolidation, right? So now we have to remember we're below an inversion fair value gap. So we're watching to see if the algorithm shows us a willingness to create an inversion fair value gap here, right? So right now, this is being defended and it's not showing a willingness to create an inversion fair value gap here. All right. Now we'll move forward. Ah, man, it's 1 o'clock. My mama calling. Pumpkin. I'm in here cooking, baby. I'm in here cooking. I'm on live. I've been on live for a minute though. My mama said, hey, live.
Hi, Mama.
They said, hey, mama.
Hi.
Yeah. I'm cooking right now. I'm a call back when I finish.
All right, dear.
All right. Love you, baby.
Love you too.
Yeah. So, right. So now, remember what we said, okay? When we are watching our PD arrays, right? We're looking for signatures of what the algorithm is telling us, okay? We're looking for signatures of what the algorithm is telling us. Now, I'm going to go ahead and give us the benefit of hindsight. And I'm going to go ahead and put the meat back on the bone here. All right, that's the end. All right, I'm going to go ahead and put the meat back on the bone. And now using those same thoughts, right? The same thoughts, okay? We expecting a retracement off of this. All right. So we come down, right? We create a SIBI going through it, right? Then we come back up and we create a BISI coming back through it. Okay. So if we're anticipating a retracement off of this, okay, if we create a SIBI going through it, right? What do we want to see be defended if it's going to act as a SIBI, right? We want to see the upper half be defended. We immediately trade through and create an inversion and then create a BISI at that same quadrant level, right? So now this is immediately disrespected. Soon as we traded through there, immediately disrespected. It didn't defend the upper quadrant. So that has failed. Now that fair value gap has failed, right? It's a good indication that all of these may fail. Why? Because we're reacting off of a spot where we're anticipating a retracement off of, okay? Did not show any type of respect for that. So when price trades back down into that quadrant right there, right, you could buy off of that inversion fair value gap. You can buy off the consequent encroachment. You can buy off of that. Why? Because this, right, failed to act as resistance at a level where we're anticipating a bullish move. even if we don't blast to the moon, right? You can fractalize the concepts. Even if you don't blast to the moon, it's a bearish PD array is failing at a spot where we're anticipating price to be bullish, right? And we're creating a bullish PD array in line with that same quadrant, right? So what do we anticipate it to do? Act as support. All right. Now we come down, right? We create the BISI, that right there. We respect that inversion, right? Trade back down into the inversion, blast off all the way up, right? Into that first SIBI, the one that we're watching to see if it's going to become an inversion fair value gap. All right. It totally trades, slap through it, trading all the way up into the above the upper quadrant after repricing the entire thing, right? So now at this point right here, right, all eyes on this. Okay, this look like it's going to create an inversion here. This right here is bullish. This right here, you know, all this right here giving me this bullish signatures, but we can't forget that we are below an inversion fair value gap, and we're looking to see if this is defended, right? We're looking to see if all of this is defended right here. And that's what this little area is right here. Matter of fact, let's do it like this right here, right? And this is why we get caught up when we're watching price. Like I say, we're afraid to just say, okay, this is what I'm standing on. I'm standing on this, right? Right there. That's what we want to be defended. All right. We're looking to see if that be defended. Okay. So as we come up, right, we trade into our area that we're looking to be defended, bounce back out of it, close above the upper quadrant of this area where we're looking to see if it becomes an inversion fair value gap. We trade back up into the area that we're looking to be defended, right? Come back down, close back inside of this area that we're looking to become an inversion fair value gap. Open up and trade down and close back below this. At this point here, is price showing a willingness to create an inversion fair value gap, or is it showing respect for the area that's being defended? What's happening at this when we come down here and close right here? What is this candle right here telling you? Matter of fact, this candle, and this candle. What are those candles telling you about this area right here? We're watching to see if this becomes an inversion, and we're watching to see if this is defended based off this inversion fair value gap. What is price telling you right in that area right there?
That it doesn't have a willingness to go higher, that it's respecting the top part of that,
Yes.
the premium part of that gap.
Yes. Price is showing respect for the inversion fair value gap. And we're getting confirmation of that because price is not creating an inversion. This is the first SIBI that we dropped down there, and when we came back and got this change in the state of delivery right here, right? Once we got that change in state of delivery, if price was bullish, that should become an inversion fair value gap because it's the first SIBI that was created when we came down, did whatever we were going to do, and came back and got a change in the state of delivery, right? That counter right there gave us a change in the state of delivery, and it closed above the upper quadrant of that inefficiency, right? So now price is not showing a willingness to create an inversion fair value gap, right? So based off this, anticipating it to become an inversion, is showing you right here, I don't want that to be an inversion, and it's happening on the idea of this being respected as an inversion fair value gap, right? That's why I say Empire Traders then jumped ahead of me and said, hey, there's an inversion there that we should be respecting. Thank you for that, my good sir. Right? Stay out of my teacher's notes. All right. So now that we are in line with what the algorithm got going on, right? What the algorithm has going on. Now, when we look inside here, right? Let's look at the small details of what it's given us. Okay. So now it's not showing a willingness to create an inversion fair value gap, right? When we trade back down here, we close below it, and then this candle right here creates a SIBI right there, right? Now, what did we say about bearish fair value gaps and bullish fair value gaps, or bearish PD arrays and bullish PD arrays, right? If y'all can't smell what the rock cooking right now, you need to get off my live, right? So what we want to become an inversion, the algorithm is not showing a willingness to do so. And we explained why, right? We create a SIBI here. We've identified we're respecting this area right here, right? We've identified we're respecting this area right there, okay? Now, we create a SIBI as we're coming down. We come down to a BISI. Right? We come down to a BISI. What is defended on this BISI right here? All right, y'all see what's defended on this BISI right here? Right? The lower half, the discount of this BISI is defended. It sends us back up into that SIBI, right? Right? Sends us back up to that SIBI. This SIBI is the first SIBI we create when we come back down, right? This BISI is the first BISI we create when we went up. All right. So we come down to that SIBI. The lower half gets defended. I mean, it's BISI, lower half get defended. It sends us back up into that SIBI, right? Sends us back up into that SIBI. What's defended on that SIBI, right? We trade up into it, wick off of that upper half. When it trade into that upper half, get up out of there, right? Trade it up out of there hard, right? Come over here, right? We trade back up, right? This time we come up, fail to touch consequent encroachment of that inversion fair value gap that we're watching, right? We're inside this rejection block right here. Fail to make it to the halfway point. Look like we may be somewhere around the lower quadrant. And then what happens? Reject off of there, right? Right. We traded up into it, but we reject off of there. Come over here, right? Touch it. We trade down into there, totally overlapping that BISI right there, right? Close up here, but we're still respecting it. Open up again, trade up into the upper half, get out of there, right? Totally, it's trying, but it's totally defending, right? The upper half of that SIBI right there. After it has defended the upper half of that BISI over there, right? Right? It's showing you little signatures, what it's doing, all right? But it's also showing you little signatures here. This is how you can trade against the grain, right? Okay, look, we respected that, right? We came up here, right? If we're coming up here, where can we draw back toward? We got a SIBI up here. If price is bullish, it'll want to create an inversion fair value gap. So I can trade back up to that at least, right? But if price bearish, I can wait for price to come back up here and short off of this, right? This is how you make your trading decisions based off what price is giving you. All right. So now we see this is being heavily defended, right? Up here. And when we start coming back down, right, to this bullish PD array that we defended the lower quadrant, I mean the lower half, right? We come down here, we close, right? We trade down below and we close right at consequent encroachment. Then we open up here, trade up into that lower quadrant now that we're below it, and we come back down and create an inversion fair value gap right here, right? Was the lower half defended this time? Nope. Right? Lower half wasn't defended that time. And then price, right, continued back down into that lower quadrant there. Now, going back up here, how could you trade this, right? Off of that bearish PD array right there, because price is showing you I'm defending this inversion fair value gap. I'm bearish. So now you're looking for a reason to get short in a premium, right? Come down, went back up, it defended it, traded down. Now I'm looking for a reason to get short in a premium. What reason do I have? I got a bearish fair value gap up here that I can get short off of. I have a reclaimed fair value gap up here that I can get short off of, right? So price trades back up into the reclaimed fair value gap, trades up into the bearish fair value gap, right? Manipulates out, buy side, trading up into the rejection block before dropping off of the bearish fair value gap and consequent encroachment of the reclaimed fair value gap, and then takes it down, right?
Would you have taken that opposing quick trade, seeing as how that was at 25% level, and once we closed over it and created that inversion there, taking it off of that candle up to the upper half of the
Then from here
bullet?
to here,
That first leg down when we were talking about the 25% level, and I said
here,
a retrace. Yeah.
yeah,
Would you have taken that back up?
yeah. I talked about that. You could have traded off
Okay,
of this.
off of
You
that
could have,
too, right? Yeah.
yeah, you could have traded off this to take it back up to this fair value gap right here. We
Yeah.
talked
Okay.
about that's what we
Okay.
talked about the first time. You could have
Okay.
taken this off of that to trade it back to this here, because we've come down and we're anticipating a retracement off of this. And so since we got a bearish fair value gap here that we immediately don't defend, right? Now we could trade off of this with the anticipation of coming back up to some type of premium at least, especially since we're below an inversion fair value gap and price is going to move up to give you an opportunity to sell in a premium, right? So you could have traded off of that. Just like over here, you could have traded off of this because price came up and defended this. So now you're looking for a reason to sell in a premium. So if it's defending it and it's coming down, you're anticipating price to give you opportunity to sell in a premium. So you could trade off of this to come back to at least the order block or the reclaimed fair value gap. And if you know what I'm saying, want to push it a little bit, the bearish fair value gap that's created up there. You see what I'm saying? Because this is inside of this reclaimed fair value gap, just a level of confluence, right? Level of confluence for the bearishness. So we talked about different ways of being able to trade up against the grain, and how to trade the actual move, right? And this is how to trade the actual move over here, because price has come down, right? Came up, defended the upper half of this right here, right? Show you that it's defended, right? Because you could just trade off of this, but this is like showing you that it's defended, and then now this is your entry, because you got your confirmation, and then now it's giving you an entry, right? It's giving you an entry, and then it's giving you an entry when you're getting ready to go into a macro time, right? You're getting ready to go into a macro time, and going into the macro time, the algorithm is going to engage liquidity or imbalances that have not been touched, right? And in this case, right, the draw on liquidity is down, right? So it's giving you opportunity to get involved, getting ready to go into a macro time here. right? And then you trade up into it there. And then this is when the macro window opens. We trade up into the lower quadrant of the reclaimed fair value gap and then spool toward the liquidity, right? Because it's you want to look at the signatures. You want to look at what price is telling you when we talk about, is it showing a willingness of this? Is it showing a willingness of that, right? And you want to combine the stuff as it's going along, right? We got a inversion fair value gap where we should defend this right here, right? We're right in the middle of the road, and we have a SIBI here that has the potential of becoming an inversion fair value gap because we're trading off of a higher time frame area that's anticipated to act as support. But then when we see the unwillingness to create an inversion fair value gap at a spot where we're anticipating it to be defended, right now we see, oh, we're respecting bearish order flow. I need to be looking for reasons to sell in a premium. So when you see a reason to sell in a premium, right, and price comes back and offers that to you, right, that's when you strike. Well, Tim, what if it trades up and stops me out? You either got manipulated out or you just was wrong, right? But you have to learn to trust the process or you won't never push that button, because you're always going to be the one that's there in class that's afraid to say what you're committed to because you don't want to be wrong, right? That's what we all deal with every single day. All right. I didn't plan on going into all that, but hopefully y'all got something out of it. And now we're going to just go into our chart prep because I need to call my mama back. Any questions? You smell what the rock cooking? Charles say, I smell what the rock cooking. All right, so as we see on our monthly time frame, we've come down and taken out the monthly low from October. All right, we've traded down and taken out the monthly low. We're watching to see if the October candle is going to act as an immediate rebalance on the monthly time frame, right? Because we closed September with the possibility of creating a BISI. October traded down into the August candle. So now we're watching to see if this acts as an immediate rebalance. Tim, what does that entail, right? November and December making all-time new highs. Right? Either in November or December making all-time new highs because we came up, right? We came down, right? And made a high. So now if this is immediate rebalance, the immediate rebalance will send us in this direction, right? It's a strong signature that sends you in the and just keeps going. So we want to see an immediate reaction. We want to see either this November candle showing extreme bullishness and even making a new high, or this one showing extreme bullishness and then making a new high in December, right? We want to see that discount sensitivity here. We don't want to see it still do and closing real heavy in November, right? You want to see that discount sensitivity and either make a new high or close really bullish and then December make a new high, right? And that'll be, yeah, that was our immediate rebalance. That's on our monthly time frame. All right. So
Hey,
on the
Tim,
week, yes.
on that monthly time frame, when you said the discount, where are you saying is the discount? Is it the bottom, the wick of the October candle?
Yeah, because this is
Like respecting,
this is the low.
like
This is
putting that into quadrant?
no, this is the discount PD rate. So you want to see that discount sensitivity off of like any discount PD rates that you have, right? We open here, right? This is a discount PD rate. So when we trade down, we want to see that discount sensitivity because we're looking for this to be an immediate rebalance, right? So when you come down to this old low, you want to see that. You want to see discount sensitivity there.
Okay, so we need to respect that old low or that wick from October.
Um, the way you asking it, I'm gonna say no. The way you asking it, I'm gonna say no, right? Because if we go from where
Oh, okay, I
we go
see.
from where we go from where we left this balanced price range, right? We're coming down
Yeah,
to
yeah.
equilibrium. Okay, we're coming down to equilibrium. Now, we've come into a slight discount there, but when I say we want to see discount sensitivity here, because this is a discount PD array based off of where we started. You see what I'm saying? This is a PD array that's below price. So when we're coming down to this discount PD array, right? And it's in conjunction with our equilibrium or fair value, we're looking for discount sensitivity here, right? We want to see price show sensitivity and go back up because we're anticipating this move down into that candle to be an immediate rebalance.
Okay, gotcha. Thank you.
Yeah. All right. And it, when I say discount sensitivity, as far as this low, it has nothing to do with is this like in the discount of the range. It's just that on the monthly time frame, there's no imbalances until you get way down here. And for price to be exceedingly bullish, you don't want to see this traded back to. You want to see that act as a breakaway gap, because that's the first imbalance we got coming out of this balanced price range. We want to see that act as a breakaway gap. And it's been acting as a breakaway gap because we haven't traded back into it. And because every time we had an opportunity to create a fair value gap, we got an immediate rebalance there. See, we traded down into that candle. The next candle, we closed up with another opportunity to create a fair value gap. Then we came down, traded into there, right? And then now we closed up here with the opportunity to create another fair value gap. Then now we traded all the way down into this low. So we're looking for discount sensitivity here, right? Just like we saw discount sensitivity off of this wick, right? Just like we saw discount sensitivity when we traded back down into that candle right there. We saw it get back up off of it. We're just looking for that sensitivity at that old PD array, right? We traded into an old high, got discount sensitivity, right? Traded down into an old wick, got discount sensitivity, right? Traded down into an old low. We're looking for that sensitivity. And we also traded into, this is the wick that did the most damage, traded down into there also on the monthly time frame, right? Looking for that discount sensitivity, right? We came down below consequent encroachment, failed to get to the lower quadrant, and now we're moving back up off of it so far, right? So we're seeing discount sensitivity in this wick, discount sensitivity off of that low, right? So we're seeing the sensitivity, but now do we continue it or do we continue to go down? But we're just watching, right? This is a monthly chart, so we still got a week left, slightly a week, because these 2 days right here is going to be nothing, right? So we just got a few more days left, because Thursday and Friday is just going to be all that jumbled up price action. Okay. Weekly time frame, right? Set our low and high. Right. So weekly high and low from last week. Said we came down into our bullish order block. We got discount sensitivity off of the bullish order block on the weekly time frame, right? Traded down into the bullish order block. We saw discount sensitivity. We closed above the bullish fair value gap, right? So we came back down to the reclaimed fair value gap. Remember, Michael teaches reclaim more than one way, right? When we come down, trade out, use it, and trade back down to it again, right? That's a way of reclaiming. Or if we trade down, create an inversion, get back on top, that's a way of reclaiming, right? So closed above the reclaimed fair value gap, seeing that discount sensitivity off the low, off the fair value gap, off the order block, right? So we got discount sensitivity there. on this time frame that's lending to because the overall higher time frame is bullish. So that's why we're looking for these bullish signatures, right? Knowing that here, okay, right? Knowing that here on a daily time frame, we got a bearish break in market structure here. For the weekly time frame, right? Michael taught us that when you trade below that low right there, since it's inside that imbalance, right? That's not a break, that's not a market structure shift, right? Because this swing low right here, right, is inside of all of this price action there. Now, this is the structure there. So trading below here would be a market structure shift, right? Because this is the base of the structure, right? If we come down there, that'll be a market structure shift for the weekly time frame. But the daily time frame has had a market structure shift. Why? Because the weekly got reasons to come down there. The monthly had reasons to come down there, right? So, but we're still looking for bullish signatures because we're in an overall buy program on the higher time frame, right? Not trying to pick the bottom of the sell program of the daily and below, right? But we're just watching how do we react when we get to anticipatory reactionary points. All right. Daily time frame, right? We can see we come down to the lower quadrant of our 60-day IP to look back. This was our original 20-day look back, right? This right here was our original 20-day look back right there. We've come to the sell side liquidity inside of our 20-day look back. I think we said it took us 15 days to reach it from the time we started watching it. So the theory of IP looking back 20 days and completing it within 20 days has come to fruition here, right? Because this was the lowest low and highest high that we were looking at 20 days back when we started watching, and then 15 trading days later we had traded into that sell side, all right, and completed this market maker sell model right there. So now this is our 60-day look back, lower quadrant right there, right? We're seeing a little bit of discount sensitivity at that 60-day look back, lower quadrant. All right. Michael teaches when you come to the lower quadrant or the upper quadrant, we can anticipate deeper retracements. He also teaches we're looking for. Oh, y'all about to go hang out? All right. This right here, you're looking for the bulk of your trading opportunities between the upper quadrant and the lower quadrant, right? This is where you're looking for your trading opportunities. And then you see, right? You can also see just looking at price action, where does it look like the most opportunities present itself, right? Right there inside that range, right? All right. You got to take my word for it. Go back and look at it. All right. And also remember, when we run in quadrants, right, it's not based off of because it did this. It's based off of showing us where we can look for trading opportunities in the future, right, at these quadrant levels right here. All right. Our daily time frame, mark our daily high and low. All right. So our daily high, our daily low and our weekly low is the same level, 23,904.50. All right, same level for our daily low and weekly low. All right. Like we said, we completed a market maker sell model here. All right, we completed a market maker sell model, and that brought us back down into this area, right, of consolidation. And let's check this real quick because it looked like we came down into an inversion fair value gap, which we did. All right. So we traded down into an inversion fair value gap, got discount sensitivity off of that. So now on the weekly time frame, we saw on the monthly time frame, we saw the reason for the discount sensitivity, which was the low and the wick. The weekly time frame, it was the 60-day look back and sell side, I believe, and we respected a reclaimed fair value gap. On a daily time frame, we came down into an inversion fair value gap. It's that first fair value gap we got before trading below that low, and then getting this change in the state delivery here. First fair value, first SIBI that was created, right? Traded down into that inversion fair value gap, got that lower quadrant, couple confluences there, right? So we've seen what we're reacting off of on the discount tip for the monthly, weekly, and daily time frames. Okay. And we can see here we got an institutional order flow entry trail off of that. The lower half being defended well. Look like it even bounced off of the upper quadrant. All right. Now we traded back up into this candle here, right? We closed with opportunity to make a SIBI that big. So now if you're bearish, right, this trading back up into this candle, you'll be looking to see if that's an immediate rebalance, meaning it sends you toward this low down here, right? So you want to see this next day, at the latest the day after that, making wins and coming back down here and creating a reclaimed fair value gap to go attack that low, right? That's what you would be looking for. Those are the things you look for, right? You see this here, you be like, oh, we traded back up into that. Is that going to be an immediate rebalance? That's if you bearish. Now, being in a discount, coming to discount PD raise in a buy program and seeing discount sensitivity, me personally, I wouldn't be looking to see if that's going to be an immediate rebalance, right? I would be looking to see if we use the quadrants of this wick as stepping stones to climb higher, right? That's what I would be looking for, because we're coming to a discount PD array in a higher time frame buy program. Now, if we trade up into this and use it as resistance and we continue down, then I will be looking for, okay, are we using this as stepping stones to come down? And once we come down, are we starting to disrespect this lower half? And if we start to disrespect this lower half, then I'm looking at these quadrants. I'm using everything to march my way down into that liquidity. Why? Because it's going against the grain. So if it's going against the grain, I'm not forcing that. I'm just using every PD array in between to give me targets that I can scalp in between, scalp in between, scalp in between. All right. Yes.
So on Thursday, we closed below the October low, that big red candle. So do we use that as any indication of continuing lower?
I saw somebody put a dissertation over there and it caught me off guard, so I wasn't listening for real. Say that again.
Shameful, just shameful. So on Thursday, we closed below the October low.
Okay, right here. Yeah.
So yeah, that's Thursday. And then the big red candle for October low, we closed below that. So does that indicate anything as far as us being bearish because we closed below that October low?
No, that's what we're talking about, because the higher time frame got a reason to come down here. This breaking market structure is allowed. That's expected. We expect this breaking market structure. We expect this heaviness because the weekly got a bullish order block that's right there that we need to come to. Okay, so this, like when you have this, like this closure below that isn't like an automatic, oh, we're super bearish still. No, because on this time frame, this is lower than the weekly that has a reason to come down here. You see what I'm saying? The weekly got a reason to come down here. So that daily close below that low is allowed or expected. Now, if the weekly didn't have a reason to come down here, and then we got that closure below on the daily, then you would give more weight to that closure below that. All right. Okay. And then, like I say, in the sense of you never try to pick the bottom, right? You're still, now you're watching to see, we've come to this daily PD array, right? That's supposed to act as support. right? Why? Because that's our inversion fair value gap. That's our first imbalance that was created before we came, took out liquidity, or did whatever we had to do, traded down into this order block, however you want to look at it, and then got this change in the state of delivery. That's your inversion fair value gap. That's designed to send me up. Right? That's designed to send me up. Now that I've come to a spot that's designed to send me up at my 60-day look back lower quadrant, right? Now I'm watching in a bullish and a buy program. Now I'm starting to watch is, will that's already acting as support. Now will this act as support? And if this act as support, will we trade through? Will this premium wick fail and then start to act as support? Right? Will this order block fail and then act as support? Will this premium wick fail and then act as support? Right? Because now I'm looking at the buy program, I'm expecting it to start going back up. So I'm looking for the discount PD raise to act as support, the premium PD raise to fail and then act as support. But if this acts as resistance and then this fails and acts as resistance, then I know, okay, we're still bearish. Make sense?
Yes, that makes sense. Thank you.
How do you read the, I don't know if I'm him knowledge still in here, but how do you read the daily if I'm looking to enter? That's the only thing confusing. I'm him. What help me out. You say, how do you read the daily if I'm looking to enter? That's the only thing confusing. What do you mean? How do you read the daily to make your end? Like what do you mean? How do you read the daily if you're looking to enter? Because when you're watching the daily candles, and what are you entering? Are you entering in on futures or options, or what are you entering on? What are you entering on? Yes, I'm still here learning. Is the previous day open the resistance or is the close support? It depends on if you're in a buy program or a sell program. Okay. So if you're in a buy program or a sell program, they can be either, they can be both. They can want, like the open can be resistance or the open can be support. The close can be resistance or the close can be support. It just depends on if you're in a buy program or a sell program. Okay. It depends on if you're in a discount or on a premium. I'm looking at the QQQ gold and Bitcoin. All right. So if you're looking at the Qs, it'll be pretty much the same as what you're looking at. It'll be pretty much the same as what you're looking at on the NQ without all of the intraday stuff. All right. So if you're looking to trade off the daily time frame, right? If you're looking to trade off the daily time frame, then like what are you trading? Options. If you say QQQ, I'm assuming you're trading options. Right. I'm assuming you're trading options. I'm saying if it's selling off on the daily, how do I know it's selling? And when I look at my charts, hold on. I'm saying if it's selling off on the daily, how I know it's selling, and when I look at my charts, it be buying. All right. NAS 100 is pretty much the same thing. NAS, you say NAS 100, you must be overseas somewhere, because we don't trade the NAS 100 in the US. The NAS 100 is a CFD, but the NAS 100 is just like the Qs. I mean, just like the NASDAQ. I don't know how to get to the NAS 100. NAS 100. I don't know which I don't know which broker to go through. It's a CFD. I don't know which data feed to go through. I'll just use this one, FXM. I don't know, but it's like just like the Nasdaq. See, when you look at the charts, see it's the same. It's just like the Nasdaq. All right. The pricing may be different, but looking at the charts, they the same thing. Right. So it's the exact same thing as the Nasdaq. Right. But when you say how you look, it sounded to me like you don't understand the concepts, right? Because you say if you're looking at the daily chart, how I know it's selling, and when I look my charts, it be buying. It's like it kind of expresses to me that you don't understand the concepts. Um, I join the Zoom so I can ask proper questions, but you see it selling, but bought that last day. How I know that buy is failed tomorrow. Well, I can't give you the Zoom because people crank yankers keep coming up here. And I ain't going for it no more. Like I said, you said I joined it, I'm not gonna do. But you see it's selling, it's selling, right? But bought that last day. How I know that buy is failed tomorrow. All right. So if you bought this day right here, right? If you bought this day right here, okay. All right. So if you bought this day right here, right, and we and this is where we closed at. Okay. Now we've come down to an area that should act as support. We're seeing discount sensitivity in that area, right? Right. You see discount sensitivity there. Now, you say, how do I know if it failed? Right. You have areas that can show you if it is failing, right? You want to look at the quadrants of this wick right here, right? The quadrants of this wick right here is your first line of defense, right? Because we're closing here. This is your first line of defense. If price started getting heavy and coming back down in this direction right here, you would want to see extreme sensitivity, right? And we're going to do this right here. We're going to put prices on here. All right. So if price started getting heavy, well, I probably should do this on NAS 100 because the price is going to be different. The actual price level is going to be different. I don't know what thing you get your data through for NAS 100. Which broker do you get your data through for NAS? Like over here, you see right here, it's got not broker but platform. It's got Pepperstone, FXM, Forex.com. Like which one do you? I'm just going to use Forex.com. That sound familiar, right? I use this one here. All right. So okay, so here, if we look here now on the NAS 100, right? On the NAS 100, right? We didn't make it all the way down to the inversion fair value gap, right? We came down into the bullish mitigation block here, right? NAS 100, it didn't come all the way down into the what's the name, right? But we did come down to the bullish order block. We did respect, the bullish mitigation block. We did respect the bullish order block. Okay. So we've taken out liquidity here. Right? So we've taken liquidity. We had a liquidity sweep there. Right. We've completed that market maker model. Right. We complete the market maker sell model. Right. So if you're buying in here, right, Now, this wick here, this wick there, you're looking for that. If price started getting heavy, you want to see extreme price sensitivity, right? Is right here are the price points on NAS 100. All right. So these the price points on NAS 100 right here, right? If price just started getting heavy, right? If price traded down into 23,995, right? 23,954. Okay. If it trade down there, you want to see extreme sense, and then you want to see this lower half not be violated, right? You don't want to see, like, since we traded up here and closed so bullishly off of that mitigation block over there in that order block, right? We got an order block here. We got a bullish mitigation block there. And then we have a reclaim order block over here, right? So since we got that strong reaction off of that, we don't want to really see heaviness coming back down inside there. But if you do, this is your higher time frame level to say, okay, something is wrong, right? Something is wrong. So if it do start getting heavy and coming back down to here, you want to see it get up off of there quickly, right? You want to see it get up off of there quickly. And that's for, and so now speaking of the daily close and open, all right, the daily close and open. Now this is your daily close right here. This is your daily close for Friday. All right, this is your daily close for Friday. Now when price opens up, right, if you close bullishly, when price opens up, right, you want to see price explore below that close to give a buying opportunity below that closing price right there, right? Because it's giving you opportunity to buy in a discount. Now, you don't want to see it coming back down here to this open price. That's why I say you want to see extreme sensitivity. If it do get heavy and come down here to this open price, you want to see it get up off of there, right? If it even decide to touch that upper quadrant, get up off of there, right? But you want to see it explore below the, oh, like if you're not already in, you want to see it come below that opening price to give you a buying opportunity in a discount, like when it comes to the daily time frame. Just like if you're trying to sell, right? Just like if you're trying to sell, let's say price came here, right, and we closed there, right? When price traded back up above that close right there, you're looking for opportunity to sell above that closing price. And in this case right here, price traded, this was a deep, see how we came all the way back above this opening price right there. Price traded way back up there, traded above that high before continuing all the way up, right? Right. And why did it do that? Because we had come down, right, and set these relative equal lows, and then we retrace back up into a premium to give smart money an opportunity to trade into the relative equal lows and the final destination. You see what I'm saying? So yeah, it's all about where am I coming into price at, right? I've come here, set relative equal lows, and then now when you look here, right, when we dropped here, okay, we came here, we took out that low, traded back up into there. Then we dropped down, set relative equal lows, right? Traded back up, but we didn't take out that high, right? So then we came back and engaged those relative equal lows. So looking for a reason to short based off of trading above this closing price right there, right? You have to understand, I've come and set relative equal lows. I'm inside this displacement leg here, so it may come back to a premium right there, right? You got to know where am I in the sense of order flow, right? And you don't want to solely base it off of the daily close and the daily open. But when you know I'm at a certain point in the order flow, I've come to an anticipatory reactionary point. I've come to a level of support. I've come to somewhere where price should react. Now that I've got that reaction if price opens up this day and gives me an opportunity to buy below this closing price, that's a good buy. And this is what I should look to act as support. This should not fail me based off of this. If this starts to fail, get me out of this trade. I'm wrong for right now. Right? Do that make sense to you? All right. Either I'm him typing real slow or hopefully it makes sense. Hopefully it makes sense. But y'all already know the daily time frame. Okay, he said, yeah, it makes sense. All right, the daily time frame is about the lowest that I go on the weekend chart prep. Do anybody got any questions for me before I get out of here? All right. I'm glad you found some value and you was paying attention there. I'm him. All right. I don't see nothing in the comments, and I don't hear nobody saying that. So I'm assuming that all hearts and minds are clear. I'm thirsty as I don't know what. I'm him. I typically go live at 6 p.m. Eastern Standard Time to do the price action recap and walk through price action. And then every now and then I pop up on the weekend and do a weekend chart prep. So I try to go live Monday through Friday at 6 p.m. Eastern Standard Time. Hey, if you got something out of this, hit the like button. Share it with somebody who you think might get something out of this too. Let me change my background back to the right background, because this is not the Smart Money Mentorship. This is just our regular stream. If you are interested in the Smart Money Mentorship, there's a link in the description below for the course, the Smart Money Manuscript, and the Smart Money Mentorship comes with that. Every second Saturday, we meet at 12 p.m. Eastern Standard Time to answer all your hard-hitting questions. The Smart Money Manuscript is $69.99. It's a course that I developed myself. It teaches you, I ain't gonna say teaches, it shares my understanding of everything about stock market related items. We start off with, it's 19 video courses and 19 quizzes. We start out with budgeting, right? You start out with budgeting, then you got a budgeting quiz. We talk about banking, then you got a banking quiz. Then we talk about taxes, you got a taxes quiz. Then we move into talking about brokerage accounts, right? How to get started. And you got a quiz. How much do you need for your individual retirement? Because not everybody is day traders. Some people just want to learn how to invest for retirement. Then you got a quiz. We got an introduction to futures and a quiz, right? Introduction to introduction to fundamental analysis and a quiz. Introductions to technical analysis and a quiz. Then we talk about portfolios, where we learn to set up portfolios and leverage the capital using stuff like options, and futures, trading options, trading futures, right? We also learn about like back testing and stuff inside these areas, and they all come with quizzes. Then we get into my understanding of the ICT concepts, right? You go through my understanding of the ICT concepts, everything. Time is king with a quiz, with a PD arrays with a quiz, displacement with a quiz, IPTA with a quiz, order flow, market maker models, power of three, right? It's 19 different video lectures with 19 different quizzes, right? And then every second Saturday, right, we join each other inside the live channel here, and I pop up. There's not pre-recorded. I pop in there at 12 p.m. East Standard Time, and you get an opportunity to. This is the live stream channel inside the course. You get opportunity to answer your questions, your hard-hitting questions based off of everything that's inside the course, man. $69.99. I think it's a good investment. First link in the description below. If you already got it, share it with a friend. Right? If you don't got it, pick it up for yourself. We coming up on the holidays. It's a great Christmas gift. It's a great Christmas gift. Hey, man. That's all I got. I appreciate y'all for spending so much time with me on a Saturday afternoon, man. Y'all know I like running my mouth when it comes to this price action. Y'all know I enjoy reaching out and helping other people.
Thanks, Tim.
You're so welcome, Michelle. It's so good to see you in class. All right. I think that's it, man. Y'all tell Deborah she missed a good one, man. Y'all tell Deborah she missed a good one. And since Deborah not here, I'm gonna make it so nobody can rewatch it, so she can't come back and watch it later. I'm just playing with y'all. Yeah, I bet if Hitler learned the show was still here, she probably clutched her pearls. Hey, man, I appreciate y'all for hanging out with me, man. But until the next time I get on Al Gore's internet and share my thoughts on what they call price action. She said I did. It's your boy, Timothy Lee Rogers Sr., aka Aranya Grande. That should be Big Spot if you don't hablo español. Y'all be safe. I hate these trading streets, man. I'm gone.